Oh man, I just had a great night's sleep. Now today, I need to find the next stock to buy. Oh, is that Jessica Alba? Oh, she's hot. Oh, do you think she would date me? I mean, I'm gonna be a millionaire. Okay, so she started this company called the Honest Company, and she's hot. So since she's hot, and she'd probably date me because I'm such a handsome, sexy man, I'm gonna recommend my friends buy the Honest Company.
Good morning, everybody. Welcome back to Strongman Personal Finance. My name is Christopher Bell. I'm a certified public accountant. I'm a long-term Boglehead investor. I'm author of the book Stop Being a Broke Loser. I'm an amazing t-shirt and coffee mug designer. Links in the description below. And I'm a hater of Jeremy LaFufu. Who is Jeremy LaFufu? We all know who that is. Financial education! Oh, I forgot my LaFufu hat this morning. Oops! Anyway, LaFufu, our hero, who, just bought Tesla as a speculative bet now. He thinks he's a god. He's a genius of investing. He just released a video called Buying This Stock Right Before Earnings, $34,000 today. What stock is that? It's the Honest Company. It's Jessica Alba's little, amazing, liberal, cruelty-free home product store. Diapers, wipes, blah, 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 blah. Now, I've seen this in stores, so the product's definitely out there. They're definitely generating some sales. But I really don't get his obsession with the company because a lot of the products are a little more expensive than other competitors, and they're really not that different, okay? He's entering a market that's very competitive, probably has low margins. And I don't see how Honest stands out besides Jessica Alba. I think he bought the stock because she's hot. Anyway, let's see Jeremy's analysis on Honest, why he thinks it's going to benefit in the future. Hint, hint, Jeremy's now a demographer, okay? He knows how to analyze birth rates. He knows how to project changes in populations. And then we'll go look at the financials, and I'll give you my conclusion on whether you should buy this stock. Because the earnings are coming out today. I'm really curious to see what they are, but I'm going to release this before the earnings. So let's see what Jeremy has to say about why Honest is going to go up in the moon in the next couple of years.
Huge partnership they have with Costco is very, very important on top of Target. Now, I think this is very important, okay? So what you're looking at here is the number of live births, okay, in general fertility rates in the United States of America, 1990 through basically, around 2020. And I think these numbers are about to switch. And why do I believe this? Well, the way I look at it is, one, you had 2020 was just a huge...
Okay, so he's trying to sound sophisticated here. Oh, look at this high-level analysis that I do. He's just looking at birth rates, okay? I've known that birth rates are going down. People are having less and less kids. I think that trend is going to continue, okay? Because we emphasize careers and student loans and working in your 20s, and that leaves you less time to have kids in your 30s, and I don't see that changing anytime soon. And then you compare the United States, which actually has a higher birth rate than Europe or even China or Japan. Some countries have even lower birth rates by far than us, okay? And I think we're heading that way, especially as, as time goes on. I think that's going to be the case, just simply because of how our society is functioning. Go to school, delay kids, blah, 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 blah. And I don't think the new generations are going to rush to have kids anytime soon. But here he is trying to be all sophisticated. Oh, birth rates are going down, and I think they're going to go up. And because he thinks birth rates are going to go up, Honest Company's going to benefit.
Huge step back for babies, okay? The reason being is, if people were forced to be home, you couldn't meet anybody, and if you weren't already in a relationship, it's just, not an ideal situation, okay? And so you had that going on. But then on top of that, if you look, the rates have been going down quite substantially over the years. I think a lot of that is because of my generation, the millennial generation. And the thing that's different with the millennial generation is when it comes to them and thinking about having kids, a lot of them don't contemplate it until their 30s. And I have most of the people I know around me, friends, acquaintances, things like that, are in their 30s, right? Or just, about to enter their 30s, right? They're millennials. And so a lot of those folks want to have kids, but they've all talked about they want to have kids in their 30s, not in their 20s, which is a very, very different mindset shift than what we had in previous generations. When previous generations, it was like you had you at least started having kids in your 20s, right? And just a lot of folks don't look at it like that in the millennial generation. They're just like, hey, man, I'll have kids when I'm like 32, 33, 34. And that's, their own decision. I can tell you me, having kids in my 20s, I'm like a dying breed out there, okay? It's just not something a lot of folks in my generation can
He's so long-winded.
consider. They're like, oh, the 20s, they're like, that's for partying or that's for working, one of the two, but it's not for kids. And so, that's just a different mindset. But in my opinion, these numbers will tick up. Now, will they ever tick up to here? Probably not. But I think these substantial drops are going to, kind of switch like this, okay? That's what essentially is going to happen. It's going to go something like that, okay? And so that's obviously a boom for Honest, but I don't think that...
Birth rates are, because I'm a demographer, I can predict future birth rates. I don't agree with this assessment, by the way. I think it's going to go, and Honest is going to benefit from that. So, because I think birth rates are going to go up, people are going to have kids in 2, 3, 4, 5, 6 years from now. Just buy Honest now, bro, even though it's a highly competitive industry. That's his high-level analysis. Freaking ridiculous, okay? So, that's Jeremy LaFufu. Downvote. He's almost got, 700,000 subscribers? What a freaking joke. Let's see what the financials are looking like. The Honest Company. Well, let's go look at the stock first. You guys can see my stocks. You only have 6K in Robinhood? You're so poor. Get over it, loser. Honest. Okay. So, it looks like Honest has been getting pretty freaking obliterated since its IPO. So what I think he's doing is he's buying the dip, because eventually people are going to notice, oh my god, it dipped, and if I could pump the stock, people will buy the dip and it'll go back up. And also, if you look, it's got an extremely low market cap, okay? $807 million market cap. This clown, I suspect, can potentially move this stock. I really think he could potentially do that. That's part of the other reason why he's doing it. Let's see if it's actually shorted. It's also shorted by 15% of the float. So he's maybe thinking, oh, maybe Wall Street Bets will jump on this, okay? I think he's got a lot of reasons why he's promoting this stock. It is not necessarily because of what they do. Diapers, wipes, baths, skincare, home cleaning, health and wellness products. I mean, you can go look at their website if you want. But I don't know. I'm a little suspicious of what he's doing. But who am I? Maybe I'm wrong. Now, let's look at some of the financials. Revenue. So in 2019, they had revenue of $236 million. And they had revenue in 2020 at $301 million. And then over the last 12 months, they had $311 million in revenue. So kind of slow revenue growth. Gross margin, basically flat, 35%. Operating income, negative, so not profitable. Operating margin, negative. Earnings per share, negative. Oh, they actually, how do they have negative operating margin and positive earnings per share? Thanks, Morningstar. Anyway, earnings per share negative, weirdly positive, and negative. Share dilution, not too crazy. Okay. Let's go look at some of the profitability metrics besides the margin. So we have the margin, return on assets. Where's the return on invested capital? Negative 6%. I'm seeing a lot of negatives here. Growth. There's really no data about this company because it IPO'd so recently. I mean, all you have is like, oh, in 1 year, revenue grew 27%. Cash flow. Free cash flow is a percentage of sales. Negative. And man, they must be doing a lot of investing over the last 12 months, or even their operating cash flow is going down. Financial health. Let's see how much debt they're in. Current ratio is looking pretty good. You want a current ratio over 1. Your current ratio is your current assets, cash, accounts receivable, marketable securities, prepaid assets, stuff like that, divided by your current liabilities, accrued expenses, accounts payable, stuff like that. It tells you how fast you can convert your assets into cash to pay it. Well, it tells you how likely you are to be able to pay your short-term debts in the short term. So you have the current ratio. That includes all current assets divided by current liabilities. And then you have the quick ratio, which is a more stringent measure of the current ratio. They take out prepaids and inventories when they calculate the current asset portion. All right, financial leverage, okay. They don't seem to be in that much debt, so I don't have to really worry about that. Let's look at the statement of cash flows. So we already kind of looked at the income statement. they're not generating a profit. I don't know why it said they had a profit of 2 cents per share. Earnings are 2 cents per share. So here's the statement of cash flows. The statement of cash flows shows your profitability from a cash basis of accounting. The income statement is on the accrual basis of accounting. Revenues are recognized when they're earned, not when the cash is received, and expenses are accrued when they are incurred, not when the cash is paid. Okay? You think little foo-foo knows that? So let's look at net cash provided by operating activities. This is cash provided from what the business does. They sell diapers, wipes, whatever. They have to pay their employees in cash. They have to, buy their inventory. They sell their inventory. All of that, there's cash going everywhere. This shows you the net results of all those cash inflows and outflows from the business's operations. Now, as you can see, over the last couple of quarters, negative, 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 negative. And then boom, well, that's the last 12 months. So I see 3 quarters of negative operating cash flow. So even on a cash basis of accounting, they're not even profitable yet. We'll see what happens this quarter. Let's see. Free cash flow. So your free cash flow is your operating cash flow minus your investments in property, plant, and equipment, capital assets. Free cash flow, negative, 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 negative. Okay. What about share issuances? Let's see. Other financing activity. Well, they don't really say, but it looks like, they could be issuing shares, diluting the shareholders, but it wasn't that bad. So overall, I mean, you'd have to do more analysis of this company. Like, obviously, I wouldn't buy it right now with it still freaking losing money. But, I mean, there's a chance it could be profitable in the future. I'm not saying it's not going to be. But right now, I just think it's too freaking early, okay? And this clown who's pumping this stock the day before earnings is freaking ridiculous, okay? I think he's trying to be manipulative and pump up the market cap because he can actually make a difference, I suspect, because it's only an $807 million market cap. So that's my thoughts. So you can do your own research on this stock. I wouldn't touch it. It's just losing freaking money. I'm curious to see what these earnings are. Let's see, they missed earnings last quarter, and they don't have an earnings projection for this quarter. But I don't know. Maybe I'll do a follow-up video once they actually release their earnings, and I can actually do some more analysis. But that's my opinion. Look at all Jeremy's stocks. Walgreens, Smile Direct Club, Corsair, negative, negative, negative. Anyway, that's my thoughts. I wouldn't buy it, especially before earnings. Let's see what happens. And I'll talk to y'all later. Cheers!